GM announced it is laying off 15% of its employees and cutting production at 5 plants in the U.S. and Canada. And just to be more specific on that, 2 of the plants are in Michigan, 1 in Ohio, 1 in Maryland, and 1 in Ontario. That's close to 15,000 jobs. And as we've come to expect, at least from the stock market perspective, we shouldn't be surprised that shares of GM up on this news.
Yeah, and of course, we always sympathize with people who are losing their jobs. Obviously, that's a big blow to those.
And a rough time of year.
Yeah, it's unfortunate on a lot of levels for the individuals, the families, those communities that probably rely a good amount on those factory jobs there. So that's always a painful process. But looking at GM from a business perspective, this is a company that needs to cut costs. They need to find ways to cut expenses and basically raise free cash flow and improve profitability. This is a company with an operating margin of 5%, a net profit margin of less than 1%. So they're right now really cutting a lot of corners. They're pinching pennies at this point. So I think this makes sense from a strategic perspective. At first, when I heard this news, I thought, okay, maybe they're shifting some of those production jobs to another market, maybe overseas, where you're able to hire labor for a cheaper rate or whatever it might be. But it looks like they're essentially just taking that capacity offline and then just trying to ramp up capacity or utilize their existing facilities even more than they already are. So from an efficiency perspective, that makes a lot of sense. If you have enough capacity with other factories, with other production facilities, then you should just focus on those existing production facilities rather than having several other facilities that you don't really actually need to produce the vehicles that you need to supply. Yeah,
it was interesting to see that this wasn't simply a, as you said, let's just cut these jobs, let's move them elsewhere. About 25% of these jobs are white collar jobs. So yes, there are a lot of factory jobs, but there are also some front office jobs as well. And as you said, scaling back the production in a pretty dramatic way. And it's interesting, and this was hinted at a week or two ago by I think his name is Jim Lutz, one of the former vice chairs at General Motors, talking about Mary Barra, the CEO at General Motors, and her message to her executive team, which was essentially like, let's start to look at ways that we can tighten the belt. And it's clear from, and I don't know if Jim Lutz thought that it was going to be on this level, but it's clear from this move that Mary Barra and her team essentially are saying, not only are we tightening the belt for our own business, we're doing this now. We would rather be early in cutting costs in the wake of the economy and the run that it has had. We'd rather be early on this than be late. We don't want to be the last ones to do this.
Yeah, and GM isn't in a position where they have a whole lot of flexibility. This is a company with a lot of debt. They are burning cash. And as I mentioned, their profit margins are about as narrow as you can get and still be profitable. So it's not like they have a lot of time to tinker with things around the edges. They really have to address those core issues now. So I think in this case, they're ripping off the Band-Aid. They're saying, yes, we can simplify our product portfolio. One thing I noticed in their press release is 75% of their global sales volume is expected to just come from 5 vehicle architectures by the early part of the 2020s. So essentially focusing on select vehicles or architectures and building production facilities around those architectures rather than having a ton of different types of vehicle architectures out there, which is just harder to have an efficient operation when you're trying to produce every vehicle under the sun. So really trying to simplify the product portfolio, simplify production, and in doing so, reduce expenses, increase efficiency, and this should end up saving them a lot of cash. They're expecting cash savings of about $6 billion by 2020 or so. So part of that is lower capital expenditure costs. Some of it is just cost reductions. So lower labor expenses, things like that. So ripping off the Band-Aid, as we mentioned, it's a painful time for those individuals who are affected and losing their jobs. But for GM, it's a company that really needs to do something drastic like this if they want to raise their chances of surviving over the long term.
And I think if you're looking at automakers, 2 things to watch for over the next 2 months are, one, Ford Motor and others, are they coming out with similar tightening of the belt, so to speak? And two, we are less than 2 months away from the North American International Auto Show, which is held every January in Detroit. And I have to believe that this is going to be a topic of conversation for the media at that event, whether anyone follows suit or not. I mean, it's almost like if you're a reporter covering this industry, if Ford hasn't announced job cuts, that's probably one of the first questions you're asking their executives at the event next January.
Absolutely. I think this move from GM, it undoubtedly impacts the competitive landscape for North American automakers and potentially international automakers as well. Building cars is a really challenging and capital-intensive business. So these are companies with narrow profit margins, and you got to do what you got to do if you want to raise the odds that you will be around over the long run.